Hey guys, Tom here with Keller Williams Flagship Maryland, your Maryland real estate agent. Coming back with you this episode, I want to kind of talk to you guys about credit. Had a lot of people ask me kind of how much does credit mean in terms of them getting pre-qualified, and how can they fix the credit that they do have or they know the score of and they want to boost up. First off, real quick, in terms of credit for pre-approval, the main thing credit will do with pre-approval, one, to make sure you're qualified, that you're making all your payments, have credit history, you're not using too much credit, etc. But the main thing is that it's helping with getting to a newer or better program, or can help you in terms of dropping some of the PMI on your mortgage payments, stuff like that. Now, with credit by itself, there are 5 factors that will go into making your credit. You have payment history, you have credit utilization, you have length of credit history, and you also have new credit accounts and your credit mix overall. Okay, let's start with payment history. Payment history is basically, are you making payments on time? From the day that you opened up your first credit line, you've made every payment, you haven't missed any, or you haven't missed a couple. Biggest thing is people are missing 5, 6, 7 months at a time, or 7 missed payments throughout the years that they had it, and that's just killing them. Okay, so do whatever you can so you pay your credit cards, your credit lines, anything like that. Make the minimum at least, or anything. Make sure you pay your credit. That's 35% of your credit. Okay. The next, like I said, is your credit utilization. That's a 30% of your credit. That basically is how much of that credit limit that you have. Say it's 10,000 overall. How much of it are you using? Are you using 9,000, or are you only using 1,000? Okay. So again, try to keep that roughly, when they use percentage, try to keep that credit utilization, all your total credit, under 35%, somewhere in there. Some say 50, the best say 10. But I would say in general, keep it underneath 35% of your credit utilization. You should be good there in terms of building your score up each month. Okay, the next one is length of credit. Length of credit, people want to pay off their credit cards, then close it off. Don't do that. Pay it off, but keep it open, because the first credit line you opened up, that shows how long. So it could have been 10 years ago. You have 10 years of credit history. If you got rid of it, now it jumps to the next card. Maybe the next card you didn't get until 4 years ago. So now you only have 4 years of credit history. So keep that long one, pay it all the way off. If you don't want to use it anymore, cut the card, but don't actually cut the card or close the account. Okay, keep. Next one we'll talk about is new credit account and inquiries. A lot of people want to go in these stores, doesn't matter if it's a department store or wherever, and say, hey, apply for our credit card store, Old Navy, Victoria's Secret, any of those department stores, Macy's, says, hey, you apply for our credit card and you'll get 20% off your order. And then if you get it, you'll get an additional 30%. So you're thinking 50% off, great for that one time. But if for some reason you don't get it, that's still a credit hit on your actual credit score in total. So that is showing that you keep asking for credit each time you go into stores and every time they ask you. Okay, same thing with if you're always applying for a home loan. Okay, if you're always applying for an auto loan. Okay, maybe check your home loan, find out exactly where you are, try to get pre-approved, see where you are, and don't look to actually apply again until 6 months to a year later, until you've fixed everything that is been causing you to have a lower loan amount, or if you didn't like the interest rates at that time, you move to the 6 months from now and see where they're at then. Okay. The last thing you want to talk about is credit mix. That's basically just having all of those together. Those last 2 credit account inquiries and this credit mix is about 10% each. The credit mix is just saying that you have a variety of credit accounts. You don't just have one type of credit line. You're not just having one credit card and that's it. Okay, so again, that's a little bit in a nutshell, pretty quick on what credit is. So you have 35% makes payment histories, 30% is your credit utilization, 15% is credit history. Then you have new credit accounts and credit mix, both 10%. So that makes up your whole credit If you do have any questions, reach out to me. Hopefully I can be able to answer any more in detail for what you need. If not, to get you guys into either credit repair person that I have or any of my loan offers to see where you're actually at in the home buying process. All right, guys, this is Tom with Keller Williams Flagship in Maryland, your Maryland real estate agent. My number is 443-871-2711. Also, my email is thomaskroniger@gmail.com. All that information will be down below. Also, you can follow me on Instagram, Twitter, Snapchat, Facebook, all that stuff. I have a bunch of other videos. Check them out. Please share this. Please like it and do whatever you guys can for it. All right, thanks.